What's going on, you guys? This is Aaron from Departures Capital, and welcome to the video. In this video, we're introducing an exciting new company to the channel, and that company is called Wildpack Beverage. Now, the company is in the beverage industry, but they've got a very unique business model that I'll be explaining in detail as we introduce the company to you guys. So I hope you guys enjoyed this video. Of course, for full disclosure details, this is a sponsored video, so check the description down below for full disclosure details, along with thoroughly reading our disclaimer and always remembering that these videos are not financial advice. Also, don't forget to smash that like button. It does mean the world to me and it helps my videos so very much, along with hitting that subscribe button and the bell for notifications on future videos. Also, drop us a comment down below. Let us know your thoughts on the company, good or bad. What do you guys think about, the market, the opportunity? I'd love to hear it. Love to hear from you guys always. Let's get straight into this video. So the first thing we're going to do is introduce the stock, talk about it a little bit, the size of the company. Then we're going to get into the opportunity, all the key points with the company, their website, and finally we'll wrap it up with their investor presentation just to make sure we didn't miss anything. So first off, the company, Wildpack Beverage, it is traded on the TSX Venture under ticker symbol CANS, or CANS. Has a market cap of $73 million with a 52-week range of 74 cents all the way up to $1.40. So we are trading right in the middle of that range. So if we take a look at the year chart, the stock did pull back for quite a bit of the year, and now we've been on this really nice run for the past month or so, going from about 77 cents to just over $1. But this rally could just be getting started, so this might be a really interesting time to take a look at this stock. Now, they've had some pretty interesting news recently, and you can check that out. I'm not going to go over each piece of news, but I will highlight them. So they've collaborated on private label opportunities. They begin to accept Bitcoin as payment for beverage packaging services. And they also provided a corporate update not too long ago that you can take a look at. But now we're going to jump to their website, get a little bit more information about the company, go over the key points. So your beverage manufacturing partner. All your canning needs in one place, from material sourcing to label design, from filling to warehousing. We serve middle market beverage brands efficiently and reliably. We do canning better. This year we have sold, labeled, and filled tens of millions of cans in our 5 facilities across the United States. So here's a little bit more information about their services. So sleeving and labeling. Give your cans a facelift. Shrink sleeving makes your brand look its best, the highest quality, and the fastest turnaround. Beverage co-packaging. Expand your production without a warehouse. We use top-of-the-line equipment for flexible run sizes and consistent quality. And finally, packaging sales. So standard cans, sleek cans, can ends, case trays, pack techs, and more. Whatever you need, we can provide. So some pretty interesting services that they offer here. So now let's talk about what sets the company apart before we dive into the investor presentation and give you guys a little bit more information about the company and what their plans are for the future. All right, so now let's talk about what sets the company apart. So end-to-end capabilities. Wildpack is your one-stop shop for packaging and production. No need to coordinate with multiple vendors. We've got you covered from start to finish. Then we've got location. We work with beverage brands from coast to coast. With 5 locations across the country, we provide prompt service and shipping. Our proximity to you and your customers means you and your clients can feel good about a reduced carbon footprint. Customer service. We made communication a priority. A dedicated Wildpack representative will be with you to answer all your questions and ensure a great experience with us. And finally, speed. Thanks to our integrated nationwide network, we are able to turn around orders faster than our competitors. This means you spend less time waiting on production and more time selling product. So of course, in this sense, we're focused more on the investment opportunity here, the investment side of the business. So let's dive into their investor presentation, which can in fact be easily found on their website. Just click on that investors tab, scroll down to the bottom, investor presentations right there. I do highly encourage you guys, if you are interested in the company, to download the investor presentation. Take a look at it for yourself. Always do your own research and due diligence, and always remember, these videos are not financial advice. So let's get into it, guys. TSX Venture, ticker symbol CANS, or CANS. So Wildpack Beverage. Wildpack Beverage is an operating partner to middle market beverage brands using aluminum cans that provides filling, decorating, brokering, and supply chain services. So can filling. Customer provides ingredients and formula. We blend, fill, and seal. Can decorating. Customer provides artwork. We apply label. Can brokering. Customer needs cans, we sell cans. And finally, supply chain. Customer wants to be a sales marketing firm. We operationalize them for a fee. So currently, let's take a look at their location. So they do have locations in Sacramento, Longmont, Las Vegas, Baltimore, and Marietta. That's their current facilities. Wildpack's network growth strategy to build or acquire manufacturing locations covering the U.S. middle market beverage segment is underway with 5 locations operating in Marietta, Baltimore, Sacramento, Longmont, and Las Vegas. Now, cities in negotiation here. We do have 1, 2, 3, 4, 5, 6, 7 more cities there in negotiation with a goal of 12 to 14 operational facilities by the end of 2022. So let's take a quick look at the share structure. So management and insiders, institutional, retail, and others subject to lockup stands at 51%. So that is nice to see that, management has a substantial amount of skin in the game. So now let's talk about their strategy. So number 1, structural shift has occurred in beverage consumption with an underwhelming market reaction. That's structural shift to aluminum cans. Demand far exceeds supply for key services and major inputs. Number 3, the service providers that do exist are ripe for consolidation. And finally, a market asymmetry exists with archaic service providers and digitalized brand leadership. So what is the solution to this opportunity? Build an integration platform for consolidation, acquire facilities in key geographic locations at pre-synergy, public discounted multiples, then improve them. Number 3, leverage current can supply and growth into access to domestic supply due to elevated status. And number 4, off-take operational aspect of the brand's business so they can focus on sales and marketing. And now finally, what is the company going to do? Their action plan. 6 and 12 facilities existing 2021 and 2022 respectively. Maintain over 8 times EBITDA average multiple purchase price on a pre-synergy basis. Rely on existing can contracts in the near term and add incremental domestic supply for the long term. Become our customers' competitive advantage through operationalizing them at a lower cost. So take a look at the management team. We will have many more videos for you guys on this company. We are doing an interview with their CEO, Mitch, so I look forward to that. The team brings a lot of experience. Always do your research on, the company and the team. But as we can see here, guys, we've got experience, people from Coca-Cola, Lululemon, the U.S. Army. Board of directors here. We have Sean Clark on the board. We just interviewed him. Fantastic guy, co-founder of HUD 8. So here's a list of their milestones. Feel free to pause this video, take a look. Like I said, also download the investor presentation if you want some more information. I'm not going to read this out word for word, but we are going to touch on the key points here. So the key drivers to Wildpack's total addressable market, or TAM. Global can shortage. Wildpack has access during a global shortage. Increase in RTD market. Ready-to-drink market is booming. Shift into aluminum cans is on trend. More products are going into cans at faster rates. Market is widening. Consolidation at the top is expanding the middle. Aluminum cans are sustainable. Brands' commitments to ESG drive growth. And we know this is very important. In this day and age, ESG is just very important. The environment's very important. We can't ignore it anymore. So there is a can shortage. And it's all over the news. So you can check it out there. Our near-term advantage, access to a lot. North America is out of cans. 2022 Wildpack can access. So here's their access. Sri Lanka, 75 million. Europe, 40 million. Pakistan, 75 million. Malaysia, 35 million. And USA, 75 million. Now, some of these are allocations and some of those are agreements. From the Washington Post, the US market alone is short 10 billion cans. So the global ready-to-drink market sizing. So this is expected. So by 2027, at a 21.8% compound annual growth rate, the market's looking to land somewhere between 30 to 50 billion, which is a substantial opportunity. So cans are the sustainable choice. So, consumer recycling rate, 46% recycling aluminum cans, while plastic water bottles only 21%. Glass bottles at 40%, but aluminum cans still 6% better. Recycled content, 73% from aluminum cans, 23% from glass bottles, and 5.6% from plastic bottles. And then finally, greenhouse gas emissions. Aluminum cans are by far the lowest at 53 versus 93 for glass bottles, and plastic bottles are at 107. So finally, let's talk a little bit about their execution strategy. So we intend to expand our business by executing our buy strategy. Acquiring and upgrading. Post-acquisition changes increase efficiency, doubling revenue in Baltimore and Sacramento. So this is their approach. So plan CapEx improvements and workforce optimization. Number 2, complete CapEx changes. Number 3, optimize workforce. And number 4, measure against forecasted changes. So 1 year post-acquisition synergy benefits. So shift optimization will have the highest impact on revenue of these 4 categories, with a substantial impact on EBITDA. Economies of scale can and consumable purchases will have one of the biggest impacts on EBITDA and a decent impact on revenue. Right-sized labor force, one of the biggest impacts on EBITDA and a decent impact on revenue. And finally, light CapEx will have a decent impact on EBITDA, but a much more substantial impact to revenue. So finally, guys, we're going to go over the investment highlights just one more time and then wrap up this introductory video. Like I said, we will have an interview with their CEO, which I'm very excited to bring you guys. But let's get into it. So their highlights. Demand for craft canning services is increasing. The rise in popularity of canned seltzers and craft beers has led to massive growth. Growth is disproportionately weighed to cans, creating a large unserved middle market. Demand is outpacing capacity. Consistent demand backlog allows for premium pricing and frequent price increases, reduces risk of idle capacity upon completion of build and buy expansion. Fragmented market is prime for consolidation. Undercapitalized competitors do not benefit from a national network. Standalone competitors can be acquired at attractive multiples. Relatively light CapEx catapults growth. Smaller equipment is cheaper and faster to get or install. Existing facilities can be acquired and optimized, driving significant efficiencies. Market leader for innovation. Forefront of developing digital ordering solutions, attracting millennial new age brands, and creating moat. Disrupting an industry dominated by outdated business practices. And finally, strong competitive advantages. Breadth of services offered and locations is unmatched by competitors. A national network is rewarded by marquee customers. Wildpack is positioned to establish substantial market share in the middle market and emerge as a leading consolidator in this space. So I hope you guys enjoyed this introduction. Seems like a very interesting company with an interesting business model serving a growing market. So I'm excited to continue to cover the company. Let me know your thoughts, guys. That's it for the video. Thank you so much for watching, and we'll see you in our next video. If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.